Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. Some past guests include Chip Gabarino talking about Topeka Coffee, the local roastery here in Tulsa, Oklahoma, Vondell Burns of Thankless Productions, Aaron Miller of In Tulsa, and Darren Wong, a local expert in buying, renovating real estate assets, including industrial properties. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. Doesn't matter what rental you have, single-family homes, condos, townhomes, apartments, we have the management solutions you need. Go to KeyrenterPMC.com or email us at info@KeyrenterPMC.com. Today's guest is Brandon Cobb. Brandon is a real estate investment consultant, a fund manager, and a land development coach. He's also the owner of Land Development Accelerator, a mastermind program that teaches students how to turn raw land into new housing communities by guiding them through land entitlement, development, and new construction. A former medical device sales representative, he transitioned into real estate and now leads HBG Capital. He's also the host of the Recession-Resistant Real Estate Radio podcast. That's a mouthful. The Recession-Resistant Real Estate Radio podcast. And on that podcast, he shares insights and interviews with top investors, developers, and industry leaders on the strategies behind recession-resistant real estate and successful land development. Visit www.hbgcapital.net to learn more about what Brandon is working on. Brandon Cobb, welcome to the show. How are you?
I'm good, man. It's good to be here. Thanks for having me.
Great to have you. Pleasure to have you on the show. So just to chat for a second about history, not that we need to look backwards forever, but you started in medical device sales and you transitioned into land development. What was the moment you realized that the opportunity was in raw land?
It's a loaded question. It kind of makes it seem like I just sort of skipped from medical device sales into creating these giant new communities. And let me tell you, it did not happen like that. There's a little bit of a journey there, but like my story is a little bit different. I never had any kind of aspirations to be an entrepreneur. I actually loved what I did for a living. Medical device sales took me years to break into. That was my dream job. And my boss, who finally gave me the opportunity, was like a mentor to me. He's like a second dad. And I loved what I did. So I don't have some sob story about how I worked in corporate for decades, got sick of climbing the corporate ladder and just fed up and, lived my dream. I was living my dream. And then one sunny Friday afternoon, I woke up having the best possible day you could possibly have as a sales career. And my boss said, "Hey, meet me over at Starbucks at 4:00. And I was like ecstatic to tell him the amazing day that I'd had. And, I'm rolling up. I could smell the coffee. I got a smile on my face. And I sit down. And before I could tell him how much money I had made him that day, he fires me.
No way.
And all I could think about the first probably 3-4 hours was just, what did I do wrong? What did I do wrong? What did I do wrong? Because I was like, I loved what I did. I was like, I got the Rookie of the Year Sales Award. I live, breathe, and eat my job. Like, what the heck happened? And so after the shock wore off, I learned a very important lesson that day. And that was that nobody was going to look out for my financial well-being but me.
Sure.
So you can be as low as you want to a company, put the decades in, the blood, sweat, and tears. You're just one merger and acquisition, one restructuring, one bad economic event, one retirement away from, losing it. So that lesson, nobody was going to look out for my financial well-being, stuck with me for the rest of my life. So I didn't have a job. And as a lot of people do when they don't have a job, they're like, okay, I can either go get another job or I can give this whole entrepreneur thing a shot. And so that's what I did. At first I made all the mistakes. I said, I'm really good at medical device sales and getting in. I had a lot of people reach out to me about how they can get a job in medical device sales.
Sure.
So naturally I created a course that failed. I was really into the online motivational stuff. I was like, I'm going to write my own motivational blog. That failed. And I said, you know what? I really like the Tony Robbins stuff. Let me do the whole life coaching thing. And you're not going to believe this, Matt, but not a lot of people want to take life advice from a 27-year-old. So that business failed. But then I discovered this magical vehicle is, called real estate. And the rest is history. At first I made all the mistakes. I did deals. I lost money on deals, bought stuff I shouldn't have bought, wasted a bunch of time. But, over the course of several years, I did over 186 transactions. I started flipping houses, grew that into doing about 35, 40 house flips a year, started building
Wow.
houses, started building about 30 homes a year, and wanted to grow and scale that new construction company. And so, how do you do that? Well, we had to stop chasing those vacant individual
Sure.
lots and start going after larger parcels of land to be able to build lots of homes on. And so we started doing that, and we started getting bought out about out of our land positions by these big national home builders. And it kind of led to the point where we're like, man, like we can, when you have a piece of raw land, you have options. You can just entitle it and sell the paper. That's getting it approved for a new community and just sell the approval. Or you can develop it and actually sell the ready to build lots to a builder. So
Yeah.
you're putting the roads and everything and basically making a neighborhood that's empty. Or you can actually build the home. So you got like three different exit
Sure.
strategies, which is what I really like about it. You've got some flexibility, and the rest is history. So long-winded answer to tell you, like, when did I see the opportunity in land development? It never was
Over
just
time.
blinking at me. It was just kind of over time, we sort of naturally noticed there's a lot of opportunity with it.
They say curiosity kills the cat, but why did he end up firing you? Merger, acquisition, like what was the catalyst for that?
I think he might have been having some financial difficulties. And if I'm being honest with myself, maybe I wasn't the best sales rep out there. I was
Yeah.
still kind of new and learning, but I had like the rookie of the year sales award. So I was like, I
Yeah.
gotta be kind of good for
Yeah.
for something like that. But I know sales was struggling, the first 6 months. But for whatever reason, he decided that
That
it
day.
was the best thing for his company was, to let me go.
Okay, you said something super interesting. You can sell the paper, you can sell the pads, or you could build it yourself. I mean, I hadn't thought about it, but that is a really interesting opportunity that you have multiple bites at the apple because I guess you can't theoretically sell the paper and then also, construct on some of the lands, although you could buy them back. I guess it'd be a weird transaction, but um, you have multiple bites at the apple. If you buy a rental home and you're just doing the renovation, you have one bite at the apple and you can keep it or you can flip it. I guess maybe that's two, but realistically, you have fewer bites of the apple, which is it's an interesting situation if you're going to go develop your own land. Are you at this point, are you doing anything related to kind of build to rent where you're keeping everything on your own balance sheet and
Oh man, we were all in on build to rent up until 2022. We had so many projects
yeah,
go. We were like gung ho about it, and then interest rates pretty much just wiped that investment strategy clean
yeah,
and threw it in the trash can. I haven't been
yeah,
able to get anything to pencil since.
yeah, it's been hard. I mean, in general though, if we'll talk a little bit about capital requirements later, but why do you think that land development's a better play right now than what most investors chase, which is, houses and apartments?
Well, diversification is key, right? You've been in real estate a long time. Different sectors do well at different
Sure.
time periods. And so it does belong in a real estate portfolio, like a lot of different things do. I think multifamily is great. I've got my money in several multifamily syndications, some of them not doing so hot.
Yeah.
House flipping. I know people that make a lot of money doing that. It got really saturated when we were doing it. I saw the
Yeah.
writing on the wall, which is kind of why I had to sort of pivot into new building. It was a lot more profitable. So you can make money in anything. With this particular strategy, though, like where we see the opportunity is there's an affordable housing crisis, right?
Yeah.
We create and invent new communities for national home builders. So we get the raw land approved to them what they want, what consumers need right now is entry level housing. So that's little a affordable, not big A affordable.
Yeah.
Big A affordable is Section 8 and government housing. We don't do that. That's not what
Yeah.
we're talking about. We're talking about that first time home buyer. Right now, you've got over 33% of the millennial population chasing less than 10% of homes being built. Huge supply and demand imbalance there, right? I don't need to be a genius to tell you, hey, there's an opportunity when you get 33% of the home buying population chasing less than 10% of the homes being
Yeah.
built. So that's the issue. So these big builders we work with, Lennar, DR Horton, Ryan Homes, they have to make the stock price go up. And there's only one way to make stock price go up: buy more land, build more houses.
Yeah.
That's plan A. If plan A don't work out, there's plan B, which is buy more land, build more houses. And of course, if that didn't work, you got plan C, which is buy more land and build more houses, right?
Yeah.
They don't have any other options. They have to acquire more and more land. So for the foreseeable future, we see a huge opportunity to just contract with these big national builders and just feed the machine.
I'm trying to think through the selling the paper versus actually doing the work, putting in the sewer and the infrastructure and the roads. When you get entitlement work, I presume that you've got an optional development plan where you've put in some sort of retention pond and you've kind of highlighted ingress and egress for fire trucks that need to turn around at certain places. There's block length, distance from entrance and maximum length, whatever. Is there a big difference in what you ultimately can profit if you're working on selling the paper versus selling individual lots?
Yeah, you're always going to make more money the further down
the chain you go.
pipeline you take the development, right? So you're going to make great money if you do entitlement. We aim for 500,000, 7 figures plus per deal. If you're doing the development where you're developing the land, grading it out, putting the roads in, you're going to make even more. You're going to make, multiple 7 figures on something like that, depending on the size of the deal. And then, of course, if you actually build and construct the homes, you're going to make even more money. And that's where the most value, I argue, is created when you actually build the homes. But you don't have to do all three. And you can profit along the way, which is what we recommend doing. So if we're going to develop it per se, then the entity that gets the entitlement done is going to sell it to the syndication we create to do the development, right?
Sure.
So the key with development is creating cash flow and profitability and liquidity throughout the life of the project. That's really key. You can't just shove all your profit, on the back end 3 years later and still run a business.
Yeah. But so at each stage you're pushing liquidity into the entity, into a sales entity. And then at some point there's a balancing act, I presume, between the holding costs of the raw land, the costs of actually putting in the roads and everything else, and how long you're going to hold that before you sell it. So you're trying to balance those three things or multiple things when you're deciding what you want to do and what your capital position is, what your ability to raise capital is from third-party investors into syndication, et cetera. Tell me a little bit about what a land deal looks like from start to finish in your world.
Yeah, so you've got to do the first phase first, right? Which is entitlements. And that's just a fancy word for you got to get all of the government entities that sign off on it, right? So we're blessed in America to have an amazing infrastructure in place where you've got, stormwater, public works, zoning, that can look at the development and sign off on it. Right. That's what you're doing during the first phase. You're just getting all of the government entities that are in charge of making sure new communities are safe to stamp off on it.
City staff, essentially, right?
Exactly. Yeah. So what we do is very, very simple. People complicate this whole thing, and it's really not that complicated. A lot of the sophisticated stuff that you were talking about earlier, our civil engineer does that. I don't need to understand any of that kind of stuff or learn. Like, that's the civil engineer's job. All I do is I get a piece of land under contract because I know where my buyers are. I'm going after areas that national home builders are in. I get a concept plan done, just a sketch of how many homes the engineer thinks can fit on the community. I take that concept plan to the city. If I am in a big metropolis area like downtown Nashville, I'm going to go to the local council person. That's my liaison. If I'm in a suburb, I'm going to go to the planning director. And I'm going to say, hey, are you excited about this? And they're going to say, heck yeah, this is what I want. Or you know what? Council's approving this. Like, we don't want townhomes. We want, single family detached residential. Okay. I get something they're excited about. I then take that concept plan to my list of buyers, in this case, the big national builders. And if they give me a contract with a fat deposit and I'm excited about it, now I start taking that deal through. And I do all this in the due diligence period where I don't have a lot of skin in the game. I haven't spent a whole lot of money on it. Once I get that locked up, now I can start taking the development through that entitlement process. And here takes probably 15, 16 months here in Tennessee. If you're in California, God bless your soul. It could be 3-4 years.
When a developer ultimately gives you a deposit on the land, they're paying you well in advance of you actually taking down the land theoretically and delivering them a product for sure. Are they giving you most of the money that you need to take down the land, or are you syndicating deals at that point to raise the rest of the capital?
No, so it's held in escrow during the entitlement. We
Okay.
don't buy.
You
We
can't
do
use it.
not buy. Rule number one that we teach and follow, and this is like what we tell a lot of students, and I hop on calls all the time, and like I see this mistake being made, is people buy the land thinking they're going to get an approval,
Mm,
and then they don't. So that's why we do some of that preliminary work that I just
yeah.
said, meeting with the city. We put it under contract contingent on the result that we want. So we have
Yeah.
an option. So
Yeah.
I'm not buying anything until I get all the approvals in
Yeah.
place. And that deposit that the builder is putting down, it's obviously refundable if we don't deliver,
Sure.
but it's going to cover my entitlement costs if they were to walk away last minute. That's one of the things that we do to help cover some of the risk.
Yeah. Fascinating. Do you, in general, syndicate deals? If somebody were to say, like, I'm listening to this podcast and it sounds great, I want to be involved, but I'm like, have way too much going on in my day job or whatever else. Do you syndicate deals at an early stage where people can get involved?
Yeah. So once we get it to a preliminary plat approval, which is the first stage, that's where the city has signed off on it and said, we will approve this development contingent on seeing the civil drawings.
Yeah.
So it's like a lot that you can build a home on. It's zoned to build a home, but the city wants to see the architectural plans
Sure.
first,
Yeah.
right? They need to see that the house has windows that are,
Yeah.
large enough for like a firefighter to get in, stuff like that. They just want to make sure the home is safe and it's approved. Same thing here. They want to see the civil drawings, which is the equivalent of the architectural plans of a house, but for the ground. How low are is the water line going to go? The sewer? What's the grade of the lot? Stuff like that.
Yeah.
So once we get to that preliminary plat approval, we've removed a lot of the risk and we'll just raise money for the civil drawings.
Got it. You'd raise money for the civil drawings because
Mhm.
once the drawings are done, then you get the final approval from the city and you could actually be at the stage where you sell the paper.
That's right.
So then you could theoretically sell the paper to a new entity, return something to investors, and then if you want to actually go through with the construction of the I guess flat work, earthwork, sewage infrastructure, et cetera, then you could do that in a different entity.
Yep, that's exactly right.
Wow, fascinating. If somebody were to do this on their own, how would you advise them to think about hold periods, durations? I mean, you mentioned 15, 16 months before, but like I guess capital land development's a capital intensive business. How would you advise them to finance some of the long hold periods, the capital required for some of the long hold periods?
Yeah, so let's say you want to just do some land banking. So we'll do this strategy where we don't do any construction to it. We just get it approved. And let's say it's an example where we know if we hold out for another year or two, we're going to get a lot more money for it. This works for those little pieces of land. They're like call them like islands in the middle of a sea of development. So
Sure.
if there's a ton of development going around it, and you got this little island right there, that if you hold it for a year or two and wait for all that development to be built and stabilized and finished, it's going to be worth a whole lot more. So in that end, you can do land banking strategy. And a lot of times we like to actually just buy the land outright with 100% investor equity. So we don't have any debt on the deal. We own it outright with our investor partners. We hold it for a couple of years and we sell it and everybody profits and makes money on it. So you're looking at, a year and a half to get the approvals and then maybe another 2-year hold if you want to do a strategy like that.
Yeah.
Whereas if you do the land development portion where you're developing ready to build lots for the builder, so roads, sewer, infrastructure, you're probably 2 years or less on something like that. And that could be a multiple phase project if it's larger that could continue to go on for, multiple years, depending on how large it is.
Is that small island land banking strategy not super competitive? I mean, are there not, I guess the big developers aren't going to be worried about a small, I don't know. I don't even know what small would be in your world, but 20 acres of space in the middle of a bunch of other developments. Do they not want to worry about that? Why are they not going up and down the value chain uh, in a way that allows you, for example, to grab that opportunity?
What do you mean exactly?
Like if there's multiple developments on 2 or 3 edges of a raw piece of land, you call it an island. Why are those other developers not looking 3 years down the road and saying, I'm also going to want this piece of land and take it, thus competing with you in your strategy to land bank that little piece? Like, why would they wait until you've done it?
Yeah, they could. And it's not necessarily parcels of land that are right next to new development. It might be parcels of land that are next to a development that happened 30 years ago.
Okay. Okay.
It's the path of progress. Fun little exercise is if you were to hop in like a helicopter, you can actually see the path of progress in these areas that are getting development. It spreads out. It's like a bomb. Like you drop the bomb and it spreads out as it goes in these
Yeah.
in these cities. So you can kind of see the path of progress. And that's what I'm kind of getting at is these little islands that are undeveloped. It's in an area. It's not out in the middle of nowhere, right? We're not rural. It's in the city, but the path of progress maybe has gone around it for whatever reason.
Sure.
Families just owned it for a long time, and the heirs finally passed away, or the mom and dad or grandparents finally passed away, and the heirs want to sell it. Who knows? The city maybe changed the zoning. So, here where I'm at, there's a municipality that we're very interested in because they just changed the zoning. They need more income in order to do the things that the city wants to do. And one of the big ways they generate income is impact fees.
Mm-hmm.
And what they did was they just changed the zoning to allow twice as many lots on the same parcel of land. So all the land that we've been going after that hasn't penciled because the landowners maybe wanted too much or whatever, or maybe it wasn't zoned for it. Now it really, really pencils. And so that'd be another reason why, we might see like an island that didn't work before that does now. But it's parcels of land that have development around it that are going to be really, really good.
In this case, when you're talking about density, you're saying like lot frontage line. So it was formerly RS3 and now they're willing to go RS5 or something like that.
Yeah, exactly. Like it might be 16,000 square foot minimum per lot, and now it's 8,000 square foot minimum per lot. So we're calling all these people back in this area because we got ahead of this, and we're like, "Hey, you still want to sell? Like, we can give you the price that you want now."
Yeah, very interesting. When you're talking about entitlement and this preliminary plat, for example, which would, I presume, have lot lines and say this is an RS3 lot, we're going to build 150 RS3s or RS5s or whatever, right? Which are the kind of sizes of the lots and the frontage of the houses, et cetera, or the lots themselves. What are some strategies that you'd use to mitigate risk when dealing with city council or other governing bodies, planning commissions, et cetera?
Yeah, one of the best things that you can do before you come and present anything and put it on the agenda is go meet with your liaison. Go meet with the council members who are approving these things. Get to know them and just pull up a chair on the same side of the table and say, hey, what are some things developers that have done to create win-win for you in the community? Hey, Mr. Councilperson, what are people calling you and complaining about the most? If you can solve that problem right there with whatever it is you're doing, you've got their ear. Things like that. What type of products have gone over really well? If you make them feel like you're part of the solution, you're going to get it's going to be a lot easier to get your stuff approved. Where people fall short, one of the biggest mistakes I've seen developers make is they just shove as much density as possible on this piece of land.
And then there's a lot of people
dollar signs in their eyes.
Them.
Oh, yeah. And as a result, you're going to have issues. But if you go sit down with the people in charge of getting these things approved, whether that's the planning director, he can be the liaison to the commission or the council, or go meet with the council members who are over the district and just figure out, like, what does the community need? How are developers creating win-wins? And then come and build whatever that is into your concept plan. You're going to have a lot more success.
Have you found much opposition from neighborhoods around areas, islands that you're trying to entitle that come in and say, I don't want this much density, or they try to fight you at planning commission meetings, for example?
Yeah, there's always somebody. So we nickname them NIMBYs, not in my backyard. There's always somebody that shows up. And unfortunately, when you present these new developments, there's usually a public hearing where the community can come and voice their concerns, right? The council can get it out there. And unfortunately, the only people that like to show up to those are the ones that don't want it. The people who are in support of it, they're not going to, come out and show their support. They're just not going to show up. So yeah, you do have to compete with a lot of the NIMBYs.
Yeah. What's an example of the worst deal you've ever done or that you've had to deal with?
Oh, I mean, I've lost 7 figures on deals when we were first starting out, just figuring it out. And again, by not following the golden rules, right? Buying something, not getting the approvals in place on it, thinking you were going to get it approved in place. I've hired bad civil engineers. We have a whole formula for how to pick the right civil engineers. We were off by 6 inches once on a development. It was like 8 acres, 6, 7, 8 acres. So you got to think, if you're off by 6 inches, that's 6 inches of dirt on 8 acres. Wow. That's a lot of dirt removal. That's a lot of trucks. And then it pushed all of our utilities down 6 inches. Well, then we started hitting rock that we weren't going to hit before. And rock is expensive to remove. So yeah, we've made a lot of mistakes. The two biggest, I've kind of named them, as one is they shove as much density as humanly possible. Don't do that. 2 is don't buy it until you have the approvals. And then 3, your bonus one, is you have to design it with the end product in mind. So I have people send me deals at least once a month, and they'll send me a deal, and they did the classic thing where they're just trying to shove as much density as possible on it. Had a guy who sent me, it's usually townhomes, and they send me these townhomes that are like 11 feet wide, 16 feet wide. And I'm like, who has an 11-foot wide townhome product? It doesn't exist. Nobody's going to build that. You just made it wide, less wide, so you could get more units on there and try to make more money, and they can't sell it. So you have to bring your builders in earlier on to make sure the design and everything fits properly. And
in the land development accelerator, your mastermind program, you touch on all of these things so that people don't make the same mistakes that you made, presumably, or that you've seen.
Yeah, all that stuff. Yeah, the big stuff. So there's always, the coursework that you got and go through all that. But the big thing is being able to present your deals, because this business is a lot less about making more good decisions. It's much more about making less bad decisions.
Yeah. You
don't want to make bad decisions because you can get stuck with something that's very, very expensive. You can make some pretty serious mistakes in this business. Yeah. These are $50,000, $100,000 plus dollar mistakes. 7 figures. I've lost 7 figures on a deal when we were first learning this. So it's being able to send your deals to the group, to us, and get feedback before you spend all the time and money to go and get things approved.
Yeah. There are land shortages. I shouldn't say land shortages. There are housing shortages all over the United States, and Congress is passing legislation to help push, make it easier for new developments, et cetera. Where are you seeing opportunity right now? Where are you personally working on projects? And what would you advise to people that are potentially, if you're in New York and you want to do this with some of your capital, if you're in the city, I should be specific, and you want to do something with your capital and you want to pursue land development, where's their opportunity?
Yeah, so anywhere that national home builders are building, I know it's a very simple logic, but you want multiple there, because that's all we do is we just reverse engineer what they want. Now, if you're in New York, for example, it's kind of developed, you know what I mean? So there are markets that you can be in that are really, really good. I'm in Nashville, Tennessee. It's been one of the top 10 fastest growing cities, over the last 6, 7 years. It's probably going to continue to be that way. So going and looking, the top fastest growing cities, that's going to be a great place to start. Chances are there's a big national home builder presence there. It's not hard to go type into ChatGPT, do a little bit of research, and find out, how many builders are building in that market. But that's really it. That's all you need to get started. And this strategy works for any type of real estate. We just happen to work with national home builders. But if you're doing multifamily, or you're doing self-storage or industrial, whatever it is, it's the same approval process with the city. It does not matter what type of real estate that you're doing. So, we're in Nashville, Tennessee. I love this market. It's where the majority of our deals are happening. And I just see for the foreseeable future, there being a huge pipeline of opportunities. The other thing that I would focus on is how developer friendly is the municipality. Yeah. So don't go to California if you're first starting out. I was having conversations with some developers in California, and they told me it was like 4 years to get approval. I was like, so how do you convince the seller to go under contract with you for that long? Because, I'm thinking everybody does what we do and doesn't buy it until the approvals are in place. And they're like, oh, we don't. I'm like, what do you mean you don't?
They just take the upfront risk?
No, we buy it and we take the risk. I was like, well, what happens if you don't get the approvals? They're like, we hope we don't lose too much money. So I was like, God, dog. So stay away from that. If you can if you can identify areas where there's developers are it's more friendly, business friendly states, Tennessee, Florida, Texas, like COVID kind of told you which areas to focus on, right? Like the places that didn't shut everything down. So that's where I would focus. And you there's these liaisons, or I should call them like entitlement expediters that you can work with. So you don't have to have all this knowledge. There's people that used to work for the city or people that used to work for these large engineering firms that understand the entire process, and you can actually pay them to take all of the things through for you if you want. So you don't have to be in the area that you're focusing.
So if somebody's listening to this and they want to take their very first step towards doing what you do, what do you recommend that step be?
So we've got a free course, I'm shameless plug. I want to put it in there, but if you go to learnlanddevelopment.com, there's a free course called Land Development 101. Go grab it. It's how to get started. But the first thing I would do is just go find where the national homebuilders are. Where are they building? And just reverse engineer. All we do is we go get the land under contract because we know where to look. Surprise, it's where the nationals are building. So if you go type in Nashville, Tennessee, D.R. Horton neighborhoods, or Nashville, Tennessee, Lennar neighborhoods, go click the website. They have all their communities on a map posted. Like they've showed you where they're already building. Just go after those areas on the untapped land.
Drive around.
That's where I would start.
Try to find details for the owners and start having a conversation.
Yeah, you don't even have to drive around. You can go and you can put into the GIS parcel viewer.
Wow.
So every county has a GIS parcel viewer, and it shows all the different parcels of land. And it looks like a giant puzzle where they all fit together. All the little land pieces are puzzles. And what we do is once we have identified where national homebuilders are building, you can go to Google, Lennar, Nashville, Tennessee, neighborhoods, where are they? Now I'm looking for the communities on the GIS parcel viewer. And you can see them because it's dense, right? There's a lot of little tiny dots that are the little bitty lots from the development they created. And I'm just looking for those big parcels of land that are in and around that area. And the reason I'm doing that is there's one thing in particular that I'm searching for, and that's sewer access. If you have sewer access, that means you're going to be able to get more units on your land. It doesn't mean that septic's bad. As long as national homebuilders are building houses with septic systems, you can still do that, but you're not going to be able to get quite as many units out of it. So that still works, but sewer access, depending on where the developments are, it tells you whether or not there's sewer there because they're getting the density, right? They've plugged into sewer somehow. So that is like the very first step, is just figure out where your end buyer is and go after the areas that they're already doing construction in. That's
Love it. Love. Anything I forgot to ask you or you think is worth mentioning?
No, man. I mean, you've pretty much covered everything. That's really it. You did a great job.
Brandon Cobb is a real estate investment consultant, fund manager, and land development coach. He's also the owner of Land Development Accelerator, a mastermind program that teaches students how to turn raw land into new housing communities by guiding them through land entitlements, development, and new construction. As you heard, he was a former medical device sales representative, but he wanted to create his own future, and he transitioned into real estate and now leads HBG Capital. He's also the host of the Recession-Resistant Real Estate Radio podcast, which you should check out. He shares insights and interviews with top investors, developers, and industry leaders on the strategies behind recession-resistant real estate and successful land developments on that podcast. Visit hbgcapital.net to learn more about Brandon or connect. How else can people reach you, Brandon, if they want to chat with you directly?
It's at learnlanddevelopment.com. There's a link to book on my calendar. If you're interested in learning more, you can check us out there. And I'm on all the social media channels. It's Brandon Cobb, like corn on the cob.
Love it. Brandon, thank you for being on the show. We appreciate you.
Thanks, man. Appreciate you.
Take care.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.